Hello, everyone. Welcome to Money Hour Radio, a show where we try to help you grow your money, cut your taxes, have a beautiful retirement. I am one of your co-hosts, Ben Barzideh. As usual, I have with me my trusted, esteemed, very intelligent, good-looking, not as good-looking as me, partner here, Matt Nadeau.
I'm looking all around like, who could he be talking about? But thank you very much, Ben. Thanks, everybody. Glad to be here.
We are both founding partners and wealth managers at Barzideh and Nadeau Wealth Management, a comprehensive financial planning firm located right here in Barrington and serving the greater Chicagoland area. And we are fiduciaries. And as an independent family-owned firm, we truly have the freedom to focus solely on your interests, not some corporations or those shady private equity companies that are just buying everything up these days.
Yeah. And of course, just wanted to take a moment. We know that we have many faithful listeners out there, but especially to our clients who tell us that they listen to us all the time. Thank you. And of course, we want to let you know we appreciate the trust you placed in us and we love every one of you.
There we go.
And yeah, Ben, we've got almost like a blast from the past topic. It's almost like we're going back in time 6 months or 12 months where the AI trade is back and it's going parabolic again.
Honestly, it took like 2 months off. I mean, it was literally like everyone's like, "Oh, AI is over."
Well, we're going to talk about every time's a little different with basically the same story. So we want to talk about it, what we're seeing right now. And then later in the show, we're going to talk about a really good tax saving strategy, especially if you're charitably minded. It's called a Qualified Charitable Distribution. It's what we believe is a much better tax efficient way to give if you qualify for it. So you don't want to miss it. We're going to go over all of that today.
And as always, before we start, we encourage you to subscribe to our YouTube channel on Money Hour Radio, where you can view this week's episode along with the previous ones. By liking and subscribing, you make sure that you do not miss an episode when it comes out. And also, if you want to, we have a fantastic weekly economic newsletter that we encourage you to sign up for. It's called the 5-Minute Market Brief. It's on our website, bnwealth.com. It gives you a really informative, succinct way of understanding what we're seeing that week, what we're seeing is important, our thoughts on where things are headed. And while you're on BN Wealth, hey, follow us on our social media pages on Facebook and Instagram. All right, Matt, let's talk about how the AI stocks are just going to the moon.
Yeah, and real quick, I just kind of to piggyback on what you were saying, with liking, subscribing, going to moneyhourradio.com where you can see some of our old shows. I just wanted to remind a lot of our listening audience who maybe last week you were gone over the weekend because of Memorial Day weekend. We did a fantastic segment that we got a lot of people talking about in regard to the SpaceX IPO. And it was formally filed last week and it's set to launch pretty soon. We think sometime in the next month in June. And we continue to see a lot of interest in it. And the financial media, and is it going to go up? Is it going to go down? It's a once in a decade type IPO. So we talked about ways that you could potentially invest in it, maybe even get in before it goes IPO. Just go to that YouTube page or the Money Hour Radio. So it's moneyhourradio.com and you can check it out and hear more about it. So I just wanted to plug that before, Ben, we jump into these AI stocks.
No doubt. All right. So let's talk about AI. And the surge in the tech sector and specific AI-linked tech stocks since just a couple months ago in March 31st of this year has not only been parabolic, but it's been really nothing short of historic. Memory stocks have led the way, with large memory names surging since late March. Companies like Micron, SanDisk, Intel, and Advanced Micro Devices have all risen by, get this, more than 100% since March 31st of this year. Basically, they've doubled in just a few weeks' time. But it's not just memory names that have surged. Semiconductor chips, those companies also have ramped higher, with NVIDIA up 33%, Taiwan Semiconductors up 24%, and Viacom up 42%. as have the hyperscalers and networking names like Amazon up 31%, Microsoft up 18%, Google up 45%, Cisco up 53%, and Oracle up 32%. And those were gains just coming into this week over the last 2 months. So they've gone up even more this week.
And here's where I got to jump in and put the caveat. We're not recommending you jump out and buy all of these names. We're just talking about in general these areas of the market. So this is not a recommendation. Don't just go out and buy it because you're hearing Google's up 45 or Micron's more than doubled over the past 7 weeks.
No doubt.
Doesn't mean it's going to keep up. But it is important because this is a very critical part of the market. And these suppliers of AI infrastructure, which includes these semiconductors, memory processing, data storage, and networking, they've all been revealing that there has been massive revenue and earnings growth in the first quarter. And they've even raised guidance for the upcoming quarters. That's huge.
That means the party's not over.
Yeah, that's what we're watching for. When you see raised guidance, that's always a positive. And the financial results produced by these suppliers are just astounding, right? Micron and SanDisk, they're both reporting 85% and 82% compound annual revenue growth over the past 12 months.
Wow.
Now, 80% revenue growth for established companies of that size is pretty much unheard of. It's amazing. But even NVIDIA is reporting 65% compounding annual revenue growth over the past 12 months. And this is a company which several times people have said, it can't get any better than this. And it just keeps chugging along.
Revenues are just exploding. And hyperscalers like Amazon, Google, Microsoft, Meta, Oracle, and others are spending hundreds of billions of dollars to buy stuff from these suppliers and AI infrastructure. And hyperscalers are buying things like chips, memory, storage, cloud space, and networking needed to fuel the AI data center buildout. And we can see that in the massive increase, we can see it in the capital expenditures from these companies. And even areas such as utilities and power structure infrastructure are riding this wave. And the reality is tech is just dominating the markets again. However, what's nice recently is that other areas like small caps and mid caps, those are also crushing it lately.
Yeah, and you would obviously think that with all of this great news, that we're also very bullish right now. And it's true, our Advance and Protect actively managed process that we've talked about quite a bit on the radio. It's these models that are actively managed by us for our clients. We do have a lot of exposure in these different areas, and we haven't taken our foot off the gas over these past few weeks. And in fact, in some of our more growth-oriented models, we're able to go pedal to the metal, where we go 100% stock when times are good. And when we do that, we're not just investing in a little bit of everything. What we're really looking at is to intelligently diversify by investing only in assets and areas that, based on our research, are gaining in momentum and strength. And likewise, we really want to avoid areas that are deteriorating. And we have satellite models where we'll take advantage of gold and silver and copper, stuff that are precious metals. We have the Magnificent Seven stock sleeve. We even have a portion in rare earths in some of our models. So a variety of areas, but all of it is research-based.
By the way, rare earths are what's used in all of this AI stuff and, all the electricity stuff, the electronic vehicles, all this stuff. So a lot of people say that's the next forefront to keep going up. We'll see. But we like to say this is a portfolio that you would brag to your friends about at a cocktail party or lunch or brunch. However, we monitor our investment positions every day and can quickly react if necessary. If market conditions deteriorate, we will get defensive by actually selling out of the market and going heavier into bonds or cash while we wait for things to improve. We will literally get 100% out of the market at times if the conditions warrant it. In fact, recently in middle to late March and early part of April. We were actually out of the market for about 3 weeks while the Iran war was really going on, and it was heavy and deep. But we don't believe in riding market crashes all the way down to the bottom, like you said, Matt. We feel that in retirement, it's paramount to have a disciplined self strategy to exit the stock market and protect your money if the risk of a crash gets too high.
Yeah, and what makes it different is, we like to say, we're going to watch your money like a hawk. I would say like a stage 5 clinger. You just can't get rid of it.
Oh, gosh, that's pretty close.
And I mean, if you're out there, do you have someone who's watching your money that closely? I mean, maybe it's yourself, but that's difficult to do with unbiased opinion, with research backing it. But we really feel you need to have somebody watching your money that close. And if you're hearing all this and this investment philosophy resonates with you and you're looking to have your money potentially managed like this, reach out to us. We'll do a complimentary consultation. We'll go over your current financial situation. We'll review your goals. And if we can help, that's great. If we can't, we understand. We can't help everybody, but we'll still part as friends. So to explore becoming a client, reach out online at bnwealth.com or call our office at 847-780-2980. All right, don't go away. When we come back, we're going to talk about qualified charitable distributions. Welcome back. Thank you for tuning in. This is Money Hour Radio. It's a show where we try and help you grow your money, pay less taxes, and have a beautiful retirement. I'm one of your hosts, Matt Nadeau. I have with me, as always, my trusted and intelligent, I think I got to brag about you, Ben. Ben Barzideh is here with us.
All right. Hello, everyone.
We're both founding partners. We're also wealth managers at Barzideh and Nadeau Wealth Management. Barzideh and Nadeau Wealth Management is a local, independent, and comprehensive financial planning firm. We're located right here in Barrington, and we're here to serve all of you out there, but mostly here in the greater Chicagoland area.
No doubt. And before we start, we encourage you to sign up for our YouTube channel on moneyhourradio.com. Like and subscribe so you don't miss an episode. You can see this episode on there when it airs on Saturday and all the previous ones as well. And we have a fantastic weekly economic commentary. It's timely. It explains exactly what we're seeing in the market. It's called the 5-Minute Market Brief. You can sign up for it at bnwealth.com. And while you're on bnwealth.com, we encourage you to follow us on our social media pages on YouTube and Instagram. All right, let's talk about qualified charitable distributions, which is a way more tax-efficient way to give to charity, in our opinion. And if you are over 70 and a half and you have an IRA and you give to charity, well, listen closely. Today's show may help you give to your church and reduce your taxes. What's better than that? That means God is happy. You are happy. The only one that's not happy is the IRS. They get gypped. But who cares about them, right?
Yeah, and it doesn't have to just be a church, any charity out there,
Exactly.
right? Yeah,
Yep.
and everybody's going to be happy but the IRS. And it's weird, Ben, this 70 and a half age, but you do have to be over 70 and a half. And it's one of those crazy ages that used to go along with what the old required distribution ages used to be. So anyway, let's talk about QCDs, qualified charitable distributions. They are definitely an important financial planning tool, especially for retirees who do want to support charitable organization, but at the same time, you're able to reduce your tax burden. So a QCD allows eligible individuals to literally transfer money directly from an IRA to a qualified charity without treating that distribution as taxable income. So what happens is this strategy can provide significant tax advantages, and this really becomes powerful is for retirees who are required to take their required minimum distributions from their retirement accounts. So a QCD is available, again, to individuals who are at least 70 and a half years old, and you have to have a traditional IRA. So under current tax laws, eligible taxpayers can donate up to $100,000 annually through a QCD. And the transfer does need to directly be from the IRA custodian to the qualified charitable organization in order to qualify for this favorable tax treatment. So if you as the account holder decide, well, I'm going to take this money, put it in my bank first, and then you donate it, sorry, all bets are off. It's taxable income, and you no longer qualify for that QCD.
Now, one of the primary reasons QCDs are popular is because they can also satisfy your required minimum distributions. So, beginning at 73 for many retirees, the IRS requires individuals, to withdraw a minimum amount from their traditional retirement accounts each year. And normally these withdrawals are taxed as ordinary income. However, when a retiree uses a QCD, the amount donated to the charity or church counts towards the required minimum distribution requirement, but is excluded from taxable income. That's powerful. This can help retirees lower their adjusted gross income, which also may reduce overall taxes and prevent increases in Medicare premiums or extra taxation of Social Security benefits.
Yeah, that's actually a huge feature that gets overlooked is that the QCDs, yes, they reduce your taxable income, but unlike when you itemize charitable giving, a QCD also can lower your AGI. And it's like that helps in all those areas you mentioned: Social Security, Medicare premiums. You may even also start qualifying for other things like the healthcare itemization for medical expenses. Just think of it like you're cutting out the IRS middleman. And honestly, that always feels satisfying, cutting out the IRS for anything.
No doubt.
So these tax benefits of QCDs are especially valuable for taxpayers who do not itemize deductions. So after the Tax Cuts and Jobs Act increased the standard deduction, I mean, it's incredibly high right now, especially if you're a senior. In some cases, it's almost $50,000 now. Um, a lot of taxpayers are no longer able to itemize their charitable donations because the standard deduction is so much higher. So this QCD still allows a retiree to receive the tax advantage from charitable giving because the donated amount is excluded from income entirely rather than deducting it later. So lower taxable income then also helps taxpayers qualify for other deductions, credits, things that, maybe would phase out at other higher income levels as well.
And you can also give a portion of your RMD. It doesn't have to be the whole thing. So let me give you an example. Suppose a retiree is required to withdraw $20,000 from their IRA as a required minimum distribution this year. Well, instead of taking the full amount personally, here's an option. Let's just say the retiree could direct 10,000 to go to a qualified charity through a QCD. So in that case, only the remaining 10,000 of that $20,000 RMD would be included as taxable income. So the retiree still satisfies the RMD requirement while still supporting a charitable cause and reducing their taxes. And although QCDs provide many benefits, there are also some limitations and maybe disadvantages, although we think they're minor. You want to consider it. First of all, QCDs can only be made from IRAs, not from employer sponsored retirement plans such as 401ks, unless those funds are first rolled into an IRA. Additionally, as you mentioned earlier, Matt, the donation does need to be made to a qualified public charity. Contributions to donor advised funds, private foundations, and supporting organizations generally do not qualify. So you can't just give the money to your kids and say, hey, that's
Yeah, that's really a lot of why that's there.
we can all think of our kids these days that need the help, right?
Yeah, they're like, "Hey, don't create a private foundation that you're just gonna funnel it to your family." Listen, there's also some strict rules that apply to QCDs, and if there's mistakes in processing these QCDs, these transfers, you could end up with some unexpected taxes. So, if you don't know what you're doing, you should get help on this. And we don't mean your buddy Gary, who you sometimes play pickleball with. I mean, unless he's a CPA or a financial advisor like us. And really important to double check that. And in fact, one of the things I really want to talk about with that specifically, and I've seen this many times, is when people go to file their taxes, these QCDs throw people off because a lot of times your custodian doesn't separate what's a QCD and what's just a normal taxable distribution from your IRA. And I've had to help people amend 3 years of tax returns because they didn't know what they were doing with these QCDs, especially when they filed. So it's really important to do it right. Um, Now, despite some of these little gotchas and limitations, if you're charitably minded, especially if you're a retiree over the age of 70 and a half, this strategy can be incredibly effective. You can support causes you care about, potentially lower your taxes, satisfy RMDs, and help simplify your financial life. So this is one of those rare quadruple wins in the tax world. It's kind of like finding out, Ben, hey, my dentist appointment was canceled. My cholesterol's down. My favorite restaurant brought back their famous onion rings. And gosh, your adult kids finally moved out. Quadruple win.
No doubt. And basically, it's kind of like if you're taking the standard deduction and you're giving to charity, the end result is that you can take the standard deduction and still get your tax benefit on top of that. So it's really powerful. And another way it's powerful, we talked about this, is by helping keep your AGI down, it helps reduce your Medicare premiums. Here's a number to think about. If you're a single filer, let's just say you're a widow, it only takes a little over 109,000 of adjusted gross income this year to get into where you start paying higher Medicare premiums. And that first tranche, if you go into that, you're paying an extra couple $100 a month for your Medicare, even on top of what you normally have to pay. You have like if you go over 137K of AGI, it's another couple $100 on top. So before you know it, it can really jack up your Medicare premium. So this is a really good way to keep those in check. Now, financial advisors like us often recommend this strategy as part of a broader retirement and estate planning approach. And as tax laws continue to evolve, understanding the rules and advantages of things like these QCDs can really help retirees make informed decisions that align with both their financial goals and their charitable values. And of course, as with any financial planning, investing, tax, or estate planning strategy, it's always essential to work with qualified professionals who can understand these concepts and tailor them to your unique situation. And usually a good financial planner like us, we're like the quarterback of your plan, and we help coordinate this with your other professionals like your attorneys or CPAs. And if you're in need of a good financial planner, someone who puts your interests first, we would be honored if you give us an opportunity to speak with you. If our investment and financial planning philosophy resonates with you, then please reach out to us and schedule a complimentary consultation.
Yeah. And again, reach out. We're running out of time online at bnwealth.com or call our office at 847-780-2980. All right. We're out of time. We'll see you all next week.
All right. God bless everyone. Take care.